welcome Anthony M. Graziano with Integra Realty Resources. And his presentation will be online. Our chief poster is here with us in the room, so after he gets back to the office, everything is going to be online this afternoon. Thanks. Welcome, Anthony.
So I am so pleased to be here this morning, and I really appreciate the invite from the realtors. I've been a realtor since I was 23 years old. I am a counselor of real estate, which is an affiliate commercial group that is affiliated with the realtors, and I am absolutely pleased to be standing here in front of all of you today because, quite frankly, a lot of what I know, a lot of what I learn, a lot of what I say is really extracted from you. I crowdsource your information. I crowdsource the database, the MLS, the people that I talk to, the professionals that I interact with every day. So what I'm telling you today really is nothing more than what you've told me over the last year, and I want to thank you for that. I want to thank, in particular, a lot of the people in the room that have participated in surveys that my group has done. We do an annual report for the Miami Downtown Development Authority. The development community and the brokerage firms participate very heavily in giving us feedback. We started 2 years ago doing an annual report in conjunction with One Sotheby's, the content of which you will see this morning. And again, you know, the brokers, not only at One Sotheby's, but really throughout the community, have been instrumental in helping us understand the market, talk about the market, quantify what's happening in the marketplace, and giving us real-time feedback. The statistics tell one story, but the story on the street is really the story that we need to keep talking about and bringing back to our dialogue every day, our dialogue with the media. So I want to leave you, or start at least with a couple of things. First off, for those of you that were at the broker event on Wednesday that I spoke at, I apologize because not much has changed in the last 2 days. And so some of what you will hear, you may have heard most of it or all of it on Wednesday earlier in the week. But that's not to say that I'm ripping myself off, because really, you know, an expert is a person who makes all the mistakes that someone can make in a very narrow field. And I'm, at this point, I guess, considered an expert because I've made a lot of the same mistakes in making predictions. I was on Fox News in 2007. At that time, the RMBS market had seized up, the residential mortgage-backed securities market had seized up, and they brought me on as a commercial real estate expert to ask me whether the commercial market was going to be the next shoe to drop. And I'm proud to say that I stood on national television and I told everybody that there was absolutely no way that the commercial market was going to crash because all of the commercial mortgage-backed securities were underwritten by very, very sophisticated companies, Goldman Sachs and Morgan Stanley, and I went through a list of all of these companies. And within 6 months, all of these people were, you know, flooding out of their office buildings. Morgan Stanley was bankrupt. The world was coming to an end. So to whatever extent my predictions give you pause today, don't worry, they're wrong very often. At the same time, I have to say this, you know, one of the problems with predictions, of course, is that there's no penalty for being wrong, and I do hold myself to a higher standard. I like to look back on the things that I've said. I'll be honest where I've been wrong, and when I'm right, I don't mind saying, you know, we kind of talked about that a couple months ago, a couple of years ago, and so, you know, I can tell you that I was very, very happy to participate in a realtors panel almost 3 years ago, and somebody said, is there a bubble? And I said, a bubble? We're just getting started. And at the time, there was a lot of chatter. There's more cranes in the air. Everything's happening. Everything's going to come to an end. When is the bubble going to burst? I will tell you that in February or March of 2013, there was noise in the media already about a bubble. And the development community and the realtors have made billions since then. And so I want to talk to you today a little bit about where I think we really are in the marketplace and why we're there. I want to thank the team at One Sotheby's. Again, they participated in many ways in a lot of the graphics. We did a lot of the data, and of course, then we got a lot of the feedback from the brokers. But Daniel De La Vega has been a great sponsor and participant, not a commercial, just reality that we work together on this. You know, ordinarily people say that I'm insane, but I have lucid moments during which I'm merely stupid. And so I want to tell you that there's no penalty for being wrong, but I'm going to give it a shot at being right. And so this is what we do with our data, a little bit different than I think what the MLS does. We use a lot of the MLS data, but we've extrapolated it really into two data sets, you know, the single family and the condo market. We're doing something different in this particular report in the condo market, where we've actually created a peer group of properties in each submarket. We segregated what we believe to be the luxury submarkets throughout Miami-Dade and southern Broward County. And we developed a concept in the condo market where we're doing basically a sampling of the same condo product. We picked the product that we felt was representative of that market in that segment, and we did that so that we weren't adding new product and new higher prices into an average and getting an artificially elevated average. So we're sampling the same projects, and when we change those projects, we will disclose them so that people know that those averages may be a little bit different. On the single family side as well, we're using the top 50% of the market in that sub-market to represent the luxury product in that sub-market on the basis that, you know, artificially saying, well, over $1 million is luxury. In some markets, that's not luxury. And in other markets, that's above what the 50% median would show. So to accurately reflect some of these sub-markets, we took 50% of the sub-market's median and said that's the luxury product in that marketplace. So from a methodology standpoint, it's a little bit different. If you try to line these numbers up with the MLS, they're not perfectly aligned, but they're relatively close. Obviously, we also extrapolated all the data and took out all of the sales that we thought were distressed or that looked like they were out of range in the marketplace, just to be able to get there. One of the things we're going to talk about today is really the luxury market. How deep is it, and what does 2016 hold? I really want to spend a little bit of time at the end of the presentation talking about downtown Miami. Everybody says, you know, Graziano, you're always talking about downtown Miami, and you know, that's such a small part of the condo market. There's a much larger condominium market out there. I'm well aware of that. I will say this, the reason that the downtown Miami condominium market is important is because it's what leads in the media. It's what is leading Miami in the marketplace in terms of our urban core, and it's what everybody thinks of as urban Miami. And it's really robust, and it's really vibrant, and it's something that really everybody's looking at. So when you see what's going on in the media and you say, well, why do they keep saying that everything is so bad? Why are they worried about a bust? They keep looking at downtown. And so downtown is sort of the poster child of what's happening in the market, because everybody thinks, well, it's Miami, so we have to talk about downtown. And we'll talk about the real truth and the real statistics about what's happening downtown. And then I'll give you some commentary on where I think we are today and where I think we're going. Let's look at the Miami-Dade luxury market. We did some snapshots here, and I'm going to talk about not only Miami-Dade but Broward, in the sense that, you know, my late partner, Michael Mad Dog Cannon, was always a huge fan of regionalism. He said, you know, when you look at Miami on its own, you look at Miami-Dade County, it's a very, very dynamic economy. But at the same time, he said, if you put Miami-Dade, Broward, Palm Beach counties together and you talk about South Florida, you're doubling the impact. We become like the 6th or 7th largest metro area in the United States when we talk about one another as South Florida, as opposed to Miami, which would then come in 12th or 13th in terms of population and growth. But the reality is that we are a hugely dynamic economy as a region when you factor in 2 international ports, 2 major international airports. The education system that's built around the entire South Florida region is amazing. And they are interrelated economies, and we are benefiting from our neighbors to the north, and of course they always benefit from our direction. So as it relates to the Miami-Dade luxury market, let me, you know, make some observations. In terms of the number of units sold, we saw between 2014 and 2015 a decline in the $1 to $5 million in the total number of transactions, $1 to $5 million. And at the same time, we saw the number of properties listed on an average basis per month jump significantly. And so if you're in the market and you're looking at that $1 to $5 million product, you've already felt that. You've seen more product on the market. It's on the market for longer. Now, one of the things that I've asked people is, well, why is that? You know, is that purely demand driven? And some people say no. You know, some of that's just aspirational. Some people have $850,000 homes that they're asking $1.3 million for, and they're not $1 million homes. So there's more inventory in the market in a lot of ways because the market is so strong that people are reaching, and they're reaching up into that segment of the 1 to 5, and it's adding a lot of listing inventory into that market. At the same time, though, I think if you look at the total numbers sold, it's hard to argue that that 1 to 5, you know, hasn't changed a little bit between 14 and 15. The $5 to $10 million has been pretty solid. It's remained static, 14 to 15. There's a little bit more inventory in that category. And of course, the $10 million plus transactions, again, number sold is about equal, but the number listed has gone up. So there's more product in that high-end luxury market. There's more listed, and the impact of that, obviously we're going to see in 2016. In Broward, the numbers are a little bit stronger in terms of the number of transactions. The number of properties on average per sale per month has stayed relatively constant, and their numbers have gone up. Now, they have absolutely I don't want to say no $10 million market. They had one transaction over $10 million. It was a $27 million transaction, not bad, but they don't have the depth of the market. And if you look back, and I should try and get this going. If you look at the absolute numbers between the 1 to 5 and the 10 in Broward County, and you look back in Miami-Dade County, it's astounding to me the order of magnitude when you look at how many transactions that we have in Miami-Dade County over Broward. And when we look at the pricing, you're going to see an even more staggering reality there. But the key takeaways that I want you to have as facts, and again, not every single one of these facts you're going to spin into a media story, but at the same time, it's important that you understand the dynamics and what's happening in the market. Broward County came out of the recession probably at least 18 months, if not 24 months, after Miami-Dade County. Miami-Dade County started coming out of the recession really at the end of 2011, beginning 2012. Nobody really felt it yet because we always sort of look back and see what was happening. But of course, if you listen to the government, they thought we came out in 2009. But the reality is that Miami-Dade County started really growing again solidly by 2012. Broward County was still hurting. And if you went to Broward County and you talked to people in Broward County, they didn't start to feel better until 2013. And their market and their employment market didn't start to feel better until 2013. So they came out later than Miami-Dade, and their residential market, I think, is continuing to go a little bit stronger because they were lagging our growth, and now they're catching up. I say Broward outperformed 2015 in luxury growth. What that means is they had more transactions than they had the year prior, so they outperformed. At the same time, Miami-Dade still had a substantial number, but the Broward inventory is remaining stable. They're not listing more properties, where Miami-Dade is having a bigger amount of listings that are coming to market. And the Miami-Dade 1 to 5 million segment is slowing into 2016, and listed inventory is up. We also look at the broader market, and we say, what's happening in the broader market in terms of the listings and the sales prices, and where are we going? And we looked at this and segregated it by waterfront, non-waterfront. It's good to look at pricing in the aggregate. You put 20,000 transactions together, and you get a median price, and you do all those things. But when you look at the weight that the waterfront and the luxury product puts on the overall average, whatever's happening in that luxury segment is then affecting the overall average and maybe not telling the whole story. So we segregated this by waterfront, non-waterfront, single family, and condo, so that it's not one baked-in average, because those different markets don't all move in concert every single month, every single quarter. And in fact, right now, they're not moving in concert. There are some very, very good things happening in the single family market, and there are some very, very dynamic things happening in the condo market. We're going to talk about why. As it relates to the Miami-Dade single family market, we saw reasonably good price per square foot growth. We saw about the same number sold overall in the single family market, waterfront market. And so the waterfront market held pretty steady. The average number of properties for sale is up. But again, I will tell you that when you look at the listed properties, understand that if properties stay on the market longer, then the average number of listed properties per month goes up, right? So because what's happening is we're counting every month how many listings there are. So if something stayed on the market an extra 3 or 4 months, that's in that count on an average per month. And so part of the statistic isn't necessarily that we have more inventory listed, it's that the inventory is being listed for longer, which is a signal to say, hey, that means because pricing is going up, everybody's reaching for that price, and the product is not clearing as quickly. And that's okay. But the waterfront market on a price per square foot basis has held up very, very well in Miami-Dade. On the non-waterfront, we've seen some tremendous growth. We're up 28% since 2011 on price growth. The overall, number of properties, average number of properties for sale in 2015, non-waterfront single family, is actually down a little bit on an average basis, and the overall number of transactions is up and prices are up. And my experience is this: if you are out trying to take a listing on a property that's listed for less than $1 million, the mode of the day is get it. Get it. Because eventually the seller, while their initial expectations may be unreasonable, the market today in the $400,000 to $700,000 price range is fierce. The amount of inventory out there in most of these markets is very, very thin. And unfortunately, there's a big diversity of product out there. Product that's been renovated, non-renovated, it's ready to go, it's not ready to go. But that $400,000 to $700,000 segment right now is extremely strong, extremely competitive. Teresa mentioned before, up 9.8% since last year. And that's a consequence of there being less inventory in that single family price segment. Look at the numbers in Broward County. Again, number sold up. Price per square foot up a little bit, but what's interesting to me in the waterfront single family is the price difference. Look at the price per square foot waterfront single family in Broward County, $217 per square foot on average. In Miami, that's $470 per square foot, $72 per square foot. Now, that's a huge gap. Let's quantify that in saying, though, that the Broward County waterfront product is a lot different than the waterfront product in Miami-Dade County, right? We have a lot of product that's on the bay. We have a lot of product that's on the west side of Miami Beach. We have a lot of product around Miami-Dade County that's on big, expansive waterfronts, where a lot of the product in Broward County is on canals, right? And that counts as waterfront. So there is a big price gap there, but there's also a big quality difference gap there as well. So, but at the same time, the market is still looking at that average price waterfront in Broward and saying, wow, $217 a square foot. I'm paying $190 a square foot in Miami-Dade County for a non-waterfront home. And if I go to any of the really hot markets, I may be paying $210 or $220 or $230. And so you have to ask yourself, are people moving to Broward? And we're going to talk about that a little bit, but the answer is, we've seen some migration of people moving up into Broward and continuing to work in Miami, but the reality of it is that our urban core is part of the driver here. And people really are not flooding out of Miami into Broward. There are people that are making a decision to go up there for certain reasons, but it's usually because their spouse works in Broward and they work in Miami. We're not seeing an exodus of people up into Broward because of price. But what we are seeing is that the people that are coming here from out of the area are looking at Broward and looking at Miami and making a price decision. They're making a buying decision at that time. Let's look at the condo market. Now again, this is a condo market sample. This is not the entire condo market. So the number sold here is not directly correlative to the total number of condos sold in the market. This is just within the sample that we sample. But what we see is when we look at the overall number average per sale, big expansion in the product inventory, waterfront condos. Price expansion, still good. Prices went up in 2015. But the overall number sold went down dramatically by about 10%. In the sample, and that mirrors what the larger market has been doing. Again, this is resale inventory. This is not new development inventory, and we're going to talk about that later. In the non-waterfront segment, this non-waterfront segment held up pretty strong. Prices went up. The number of units sold went down slightly, but the overall inventory has gone up by about 7 or 8%. One of the things that we're seeing in the Miami condo market, we had a lot of properties that got converted into condominiums in 2006, 7, 4, 5, 6, 7. We had older apartments that were going condoed. They got fractured. They sold 20% of the units, and then the other 80% of the product came back on the market. That created this huge statistic of all of these condominiums that were on the market that were really 1975 apartments that had been freshened up and turned into condominiums. Those projects now have actually been getting re-aggregated into apartments, and the condominiums are being collapsed. And so the amount of inventory, total inventory in the market, is actually shrinking again, where developers are going back in, they're buying big portions of these fractured units, collapsing the condominium and taking those condominium units out of inventory. That's one positive factor that's happening. The other thing that's happening is that the foreign buyers that are looking for investments are looking in specific markets throughout Miami-Dade County where rents are below what they think are par. When you go into the luxury markets today and you look at what the rent relationship is, the investors want to see that there's going to be rent growth, rent stability and occupancy stability. And so there are a lot of markets throughout the county right now where the average non-waterfront condo pricing should remain very strong because vacancies are very tight in the rental market, and there's not a lot of rental product in the market, and there's not a lot of single-family rental product in the market. And I'll point to Hialeah specifically. The vacancy rate in apartments in Hialeah is 1%. 1%. There's waiting lists at the communities in Hialeah. We do a lot of commercial real estate appraisal work. When I talk to the people that own apartment complexes, they tell me, I could raise rents 15 or 20% next year if that was the kind of person that I am. I keep my rents at this level because I've had people that have lived here for 15 or 20 years. And of course, it's a very tight-knit community, so a lot of these people know one another within the community. But you look at a market like that and you see what's happening in that market, and you find condominium product in that market, it's extremely strong. So a lot of this overall statistic is about then looking at the individual submarkets. The Broward condo market, fared rather well. Again, number of transactions up, total number listed for sale up, average pricing on the waterfront condos. Again, look at the difference in the average pricing. Waterfront condos, $479 in Miami, $207. So there's still that relationship, MiamiDade to Broward, that's pretty dramatic. On the non-waterfront condos in Broward, very, very strong market this year in 2015. And relatively stable pricing, but their pricing has only just recovered to what their 2011 pricing was. So they haven't seen the appreciation since 2011 or the value recovery that we've seen since 2011. So let me give you some, from a broader market perspective, here's what we're seeing. The percentage sold to available inventory is down. In other words, if you look at what's on the market, listed on the market versus the percentage sold, that number sort of peaked out in 2013. Well, why did it peak out in 2013? Because we had all this pent-up demand. We had people sitting there not making house purchase decisions in 10, 11, 12, waiting for their job to come back, their 401k to come back, all of the economic factors that held people back. And so everybody keeps saying, well, the market's getting worse. No, the market's not getting worse. The market is normalizing. The market is normalizing. 2013, and even to a certain extent 2014, was an extremely strong, those were extremely strong markets, but they were strong markets for fundamental reasons. And one of those fundamental reasons is we had a lot of pent-up demand. And that's okay. And so when we look at these numbers today, I would suggest to you, we're actually getting back a little bit to normal. And that's okay. And I think that when you look at a market that's growing 10, 12, 15, 20% per year in price, that's what scares everybody. And what I wanted you to leave here, if you leave here with anything today that I say, I want you to leave here with this. It's okay that our market is not growing 25% year over year, every year. In fact, that's a good thing. And that's what I've been trying to tell the media. Stop calling this a bust. This is not a bust. This is healthy. What we're going through right now is actually good. It's healthy for the market. And so if you leave here with anything today, I don't want the market to grow 25% a year. I want the market to solidly grow 5 to 6% per year. Because at some point, wage growth can't keep up. Employment growth can't keep up. And when those other economic factors are not in balance, that's when you have a problem. So 2012, 2014, we burned off our pent-up demand. 2015 was still strong. We're seeing the pricing in some segments normalize, particularly in the condo segments, but the single-family market remains extremely robust. I think it's important to talk a little bit about, the market psychology. I see it in the market. I talked before about, people making predictions and not being held accountable to their predictions. I will tell you that everything I'm telling you today is prefaced by the fact that this morning I'm having a home inspection done on a home that I'm contracted on. So either I'm going to be a really, really smart guy and have told you that the market is great and I bought a house today, or I'm going to tell you next year, wow, I really lost a lot of money on that house that I bought when I was at the thing. But I'm very confident in the market, and I'm putting my money where my mouth is. So unlike most people that make predictions, I will tell you that I am buying a house, and I'm happy to be buying a house in the market today. But there's a certain psychology to it, and I've seen it in my own experience. I've witnessed it with the realtors that I've worked with, and I've witnessed it generally in the market through talking to other realtors. And that is this. The sellers in the market obviously believe it's a good time to sell. They've been looking at the numbers and hearing all these great things. And if you've been delaying retirement, or you've been delaying purchasing and exiting your home that you raised your children in, and you couldn't sell it in 9 and 10 and 11, you woke up in 12 and you said, well, maybe I should sell it now. I'm not sure, but everybody wasn't excited yet about the market. And then 13 got a little bit better, and everybody said, oh yeah, the market's definitely getting better. And by the time the majority of the market got around to feeling like, wow, the market's really getting better, it was time to sell, and now's where they're landing, right? They're making a decision to sell, but now they think, well, the market's hot. All my friends sold their house. My friends had 15 bids over the weekend. They put the house on the market the first weekend. And so now product is staying on the market longer, and the sellers have to get more reasonable. But the sellers believe that it's a good time to sell, and that's a good thing. But as a result, with more inventory on the market, days on market is expanding. So the seller's expectations have to be set. Don't think that we're going to list the price at the top of your submarket, and all of a sudden I'm going to have 4 contracts for you this weekend. Buyers' concerns. One of the things that we talk about a lot is the supply and the inventory and the pricing and all that. Let me assuage everybody's fears here as it relates to the Miami market. And when I close the presentation, I'm going to give you some statistics I really want you to remember. We don't have much left. We don't have major, in Miami-Dade County, we don't have major new construction projects. Lennar's not building 700 new single-family homes anywhere. Right? I mean, we have some expansion potential down in Homestead, and there's a couple of smaller subdivisions in the 50 to 100 unit range, but there is no massive WCI community with 4,000 homes anymore. The expansion of the inventory in Miami, or the lack of the ability to expand our single family in Miami, is one of the strongest long-term arguments for the fact that we don't have a problem. We are still burning through some of our foreclosure overhang. And as we do, we're also faced with mortgage issues, right? We have a jumbo mortgage limit, $417,000. So, but all of this that's happening is all positive for the market, because in the long run, there's no major expansion of the inventory. But what are the buyers concerned about? Because that's what matters. At the end of the day, we don't have a supply problem. All we need to continue to solve for is, what's the demand? How deep is the demand, and how is the demand there? If the demand is there, we do not have a supply problem. So what's happening with the buyers? Well, look, the media reports on Miami, not good. I was misquoted in the Wall Street Journal. I'm pleased to do the Miami Downtown Development Authority report for the 3rd year in a row. We do a very, very comprehensive report that's available on the Miami DDA website, specifically about the downtown Miami condo market. Reporter from the Wall Street Journal calls. Can I do an interview? Absolutely. 45 minutes I talked to her about why there was fundamental balance in the market, why the market was different since 2006, what was different about the pricing and the product and the diversification of the market, what was different just about the size of the market. 45 minutes. The headline comes out. Miami condo bust imminent. I said, how did she get that from all that? And of course, she quoted me and a few others. But the whole storyline of the article was how things are going in the wrong direction in Miami. And so I wrote my own op-ed. I went online, I wrote my own op-ed, and I said, #bogus Wall Street Journal headline. And I put it out there, and I said, well, let's just see what happens. Well, you know what? I got a tremendous amount of response from it. And I'm happy to say that a lot of what we're going to talk about as it relates to downtown Miami in a few minutes is really good stuff, and it's things that I want you to understand. And if you're not working in that condo market, or you're not working in that residential market downtown Miami, like I said, it's important for you to understand it, because that's what the media is always talking about. That's what they're thinking about. The other thing that's concerning buyers is business conditions. I said before, the government puts out statistics about unemployment and all of the various statistics that the government publishes. And in retrospect, they're very helpful. But it really doesn't do me much good to find out in 2011 that the recession ended in 2009, right? It's 24 months of delayed response. Business conditions have a big impact on buyer psychology, and especially when you're selling into a luxury market, 1 to 5 million, 5 million, 10 million. These are business people that have contacts and have relationships with people all over the country and all over the world. And the simple fact is that the rest of the world is sick. The economy in the rest of the world is going through a major deleveraging. It's a lot more dramatic than we read about because our American media tends to focus on what we have going on here. But the economic conditions in other parts of the world are very dire. And it is affecting us. And I don't think that we can say that it's not going to affect us. What I think we have to talk about, though, is that the U.S. economy is the shining light in the world right now in terms of what we're doing. And we have good fundamentals in our U.S. economy. I do not believe that we are facing an economic crisis in the U.S. So but the buyers' concerns are, well, what's going to happen to the U.S.? That's the real underlying concern, because the foreign buyers that are coming here, they're flying to safety. They're coming here trying to get their money here to put it in a safe economy. The business people, the institutional investors from around the world are bringing their money to the U.S. Commercial real estate values, commercial real estate expectations, and return rates are at all-time highs. We are back to the point that we were in 4, 5, and 6 in terms of the amount of international money coming into commercial real estate. And we are back there for the very fundamental reason that the rest of the world doesn't have confidence in itself. It only has confidence in the U.S. And they're bringing money, and I say the big institutional investment funds, hedge funds, managers are levered into the U.S. and they're staying here and they're trying to decide what they're going to do with their money, because obviously pricing is affected and that pricing is going up. At the same time, the stock market last year was horrible. It was horrible. And you can't ignore the psychology when you have a high net worth individual. A good proportion of their wealth is going to be invested in various things, whether it's international equities, international funds. They're going to have investments in other areas of the country. They're invested in business in other areas of the country. And all of a sudden, other countries, not other areas of this country, other countries, and all of a sudden global conditions are going south. And they have investments in the U.S., and those are doing relatively well. But the business conditions and the stock market were a big drag on 2015. Good news? Good first quarter. Good first quarter. And if the U.S. economic conditions continue to improve and we get through this silly presidential election that I think is really dragging the psychology down, I think these buyers' concerns will start to alleviate, and I think that's going to help where we're going. Obviously, U.S. GDP growth is going to be important, and if we continue to grow, the world will continue to come. So I would say to you this, my prediction for 2016 is that our biggest short-term impact is in the $1 to $5 million product. I think we're going to see a little bit slower year this year than we have in the past. I think that's okay. I think the segment $500,000 to $1 million condo slows a little bit in 2016, but the general economic conditions are going to remain relatively robust. Let's talk about downtown Miami condo market. I have tried as hard as I can to impress this fact. And so again, I gave you one thing I want you to take away. Before, I'm going to ask you to remember this second thing. We are not overbuilding in downtown Miami. Yes, we have 7,300 units under construction in downtown Miami today. And that's excluding the Flatiron, Hugo Colombo's Flatiron project that just broke ground, I think, 2 weeks ago. So you can add another, Alicia, how many is it? 500 plus units into that pipeline. In 2005, 6, you'll see number of units delivered in 2008, 10,000. Number of units delivered in 2007, 4,500. Those units don't get built in 4 months, folks. So what that means is that in 2005 and 2006, we had 16,000 condominium units under construction in downtown Miami, contrasting that with 7,300 today. So when everybody says, are we overbuilding in Miami, from a historical standard, they say, aren't we doing the same thing we did in 2006, 2000? No, we are not. We are not. It's a fundamentally different market. Couple that with the fact that in the last cycle, when we added 16,000 units to downtown Miami, the downtown population went from 50,000, 40,000 people to now 84,000 people downtown. We doubled the size of the urban core of the people that were actually living in the urban core. So not only are we not overbuilding relative to our historic standard in 2006, but the amount of added inventory is adding to a doubled base, okay? And when you look at the job growth in downtown, you look at the upswing, an uptick of office space absorption. We've absorbed over 1 million square feet of office space in downtown over the last 2 years. That means business is growing. The downtown office employment market is growing. It's getting harder and harder to get downtown. So the people that can live downtown and want to live downtown are living downtown so they don't have to drive to work. And so we're seeing that market evolve as a real urban market. Couple that with some really positive fundamentals and things that are happening. The rest of the county is now actually going downtown. We did a retail study back in January that we published, and we looked at the overall gross tax receipts, and we extrapolated what the sales were in downtown retail. The downtown retail market comprises about 4% of the total retail square footage in the county, comprised almost 8% of sales. Most of the restaurants downtown are grossing $600, $1,000, $1,500, $2,000 a square foot in sales, in gross sales. And you cannot do that unless you're drawing from a market outside of just the surrounding 2-3 mile area. More people are going downtown, and more people are spending time downtown in Wynwood and Midtown and Brickell, enjoying themselves, literally going down there to just access the critical mass of things that are happening, and it's getting better. And so I'm very, very bullish on what's happening in downtown. And I'm bullish on what's happening downtown because I see the investment being made from the business community. I see the commercial fundamentals being tied to what's going on. And when you start to see major national companies make decisions to locate downtown, you know, you see the Apple Store talking about going to Brickell City Center. They believe that that population is going to grow, and they believe in the Miami-Dade County population that we're going to show up. We're going to visit downtown. We're going to go do and spend money downtown. And so I would say this. I'm not worried at all about the level of inventory in the condo market because historically, by historic standards, it's fundamentally good. I will also tell you that of the product, based on our surveys, of the product that's delivering in 2016, 85% of that product is pre-sold. This is the under construction product that's nearing completion, that's going to come on the market in 2016, 85% pre-sold. The overall market downtown Miami is about 72% pre-sold. Now you say, well, 30% unsold, because I'm sure if there's any media in the audience, that's what they're going to find. 30% of the units are unsold in downtown Miami. That's terrible. No, it's not terrible. That's inventory that's not being delivered in 2016. It's being delivered in 16, 17, 18, 19. Somebody starting a project today, those projects that are starting groundbreaking today are not going to deliver until 2019. So when I take 7,300 units and I chop that up over 3 years, it's a couple thousand units a year, of which it's pre-sold. So there's no standing inventory that I'm aware of in downtown Miami right now. As these projects have closed out, they've all closed. Millicento closed out, Brickell House closed out, My Brickell closed out, gone. There was no inventory that the developer was standing there holding. Now, Brickell City Center started its formal sales program much, much later than most of the developers did. They were the only ones really that built on spec. And so there are going to be units that finish in 2016 in Brickell City Center that are not going to have been sold. But quite frankly, some of that has been strategic. Some of that has been Swire's desire to say, I'd rather have the product built and have people walk through it and see what it is and get the lift in pricing, because they were pricing their units 2-3 years ago based on average pricing. So I would say this. I think that the market is relatively healthy. Do I want everybody to start a new construction project tomorrow downtown and start building? No, absolutely not. Am I a lot busier over the last 6 to 12 months with people coming and saying, you know, we'd really like an Integra market study to tell us, you know, whether we should build or what rents are going to do, what's happening in the rental market. You know, the rental market is a very important component of investment downtown, right? Because a lot of the foreign buyers are buying condominium units and renting them back. And so the rental market dynamics are another important component to look at. Rents in downtown Miami have been growing about 6 to 8% per year, year over year for the last 3 years. The rental community, the people that are actually renting downtown, are thrilled that there's inventory coming to market. They're also thrilled that there's 4,500 conventional rental units under construction. Real rental apartment projects are being built in downtown Miami. So again, more critical mass, more positive enthusiasm. As that rental product gets delivered, that could affect rents, and therefore people today are looking at the pro formas and they're saying, okay, should I build today? Let me go through this. Let me think about whether I should build today. I've got a lot of rental product coming to the market. I have a good amount of condo inventory that's being constructed today. My construction costs are up. Construction costs are still way up. 2 years ago, people were talking about construction costs. They say, I figured out whether I could build this project. I went back to my contractor and the costs went up 30%. We were seeing huge jumps in construction costs. We have not seen that abate yet. So construction costs are up, rental inventory is being built, the market is looking, and the global economy is softening. So what is everybody doing? They're taking a break. They're pausing, and they're saying, let's look a little closer. Let's do some studies. Let's figure out if this is exactly the next best location. Let's make sure my site plan and my product mix is right. And all of that pausing in the market is giving time to absorb that product. So I've said, this is a mature market. This is a market where people are behaving in a rational way. This is not everybody just plowing their money in and saying, let's build it and hope it all works out. And so I am, very, very pleased to be a part of the dialogue, but I'm also pleased to be a part of the discipline of the development community, the brokerage community, to counsel their clients and say, look, you may wait. It's okay to wait. And things will naturally progress, and that will be a good thing for the overall market. One of the things that I was encouraged to do was to really look at the amount of equity in the market. And this, to me, when we did this, I was absolutely astounded. I know the Association of Realtors has been talking about, cash transactions and the total number of cash transactions in the aggregate. But one of the things that we did was we sampled the individual submarkets throughout downtown Miami. And what we found out, and you look at the biggest submarket in Brickell, from 2013 to 2015, 70 to 80% of those transactions were all cash transactions. That's an amazing, amazing statistic. That's in the resale market, not in the new construction market. You couldn't even obtain financing in 2013 in the new construction market. So what we're seeing now is, going into 2015, about 82% of the new construction market are all cash transactions. Now, why does that matter? Well, here's why it matters. The last time we had people putting 10% down, they were not invested in their contracts. Obviously, we have a much, much stronger deposit structure. Really a consequence, not because the developers all woke up and said, we want to make the market better. They did it because there wasn't any availability of financing to build new projects, right? So if the buyers put 50% down, that gave them the equity they needed to be able to get the project off the ground. But at the same time, that deposit structure is very, very important. It is moderating a little bit. And people are making a big deal about it. They say, well, Brickell City Center reduced their deposit structure. They're almost done. They don't need to take 50% deposits. They're going to be closing those units out in another 6 months. The purpose of the 50% deposit was to make sure that the buyer didn't evaporate 2 years from now or 3 years from now when the project finished. But when you look at these projects actually closing, and 82% of these projects are closing all cash, that is a very, very unusually strong condition. And Miami, other than New York, it's New York and Miami, we're the only two markets that can do that. Fort Lauderdale has not been able to reach any measurable traction with a 50% deposit structure. And I suspect that if we looked at the cash transactions in Broward County, it wouldn't even be half of what we have here in Miami-Dade County. So, we have this really good, robust market where we have a lot of cash in the market. And so why is it important? Well, here's why it's important. So most of the projects under construction are pre-sold. Of those projects that are pre-sold, there's not a lot of leverage, there's not a lot of bank leverage against those projects. The buyers are all committed with a strong amount of cash. So what gives rise to a quote-unquote bust? What gives rise to a quote-unquote bust is when there's no buyers and there's so much product on the market that you have to continue to lower the price. Well, if there's no distress and everybody owns their product cash, so the banks aren't foreclosing and the banks aren't turning around and dumping product on the market, I look at those fundamentals and I say, why is everybody so concerned? And so I say that these are the things that, these are the data points, not one data point, not 50% deposits and therefore there's never going to be any problem. Not the second data point, well, all the buyers have cash and so everybody's got money and so it's no big deal. Not a third data point, we're not overbuilding inventory. Not a fourth data point. I mean, you look at all of these things in the aggregate, and I really think that you'd have to stretch to figure out and tell me why downtown Miami is in any measurable, even a long mile from any kind of bust. So, poo-poo on the Wall Street Journal. I don't think a bust is imminent. I also don't think it's looming, but I respect them for their journalistic integrity. Because by saying that a bust is looming, here's what you are doing. You are making the perfect headline. You are capturing the reader's attention. You're capturing their eyeballs in all the various social media aspects. And you're giving yourself the perfect analytical wiggle room. Because when things don't bust, they can say, well, we never said they were going to bust. They were just looming. And if things do go wrong, then they say, well, see, we predicted it. We said it was looming, and then it happened. So it's a win-win headline. But it's BS. Fact is, 85% of the inventory delivered this year is pre-sold. We're happy about that. All under construction inventory, 73% is pre-sold, excluding Flatiron. Flatiron has substantial sales, well over 50% to date. Very high equity ownership in the market. Under construction inventory is in check. The new development pipeline has narrowed. I didn't mention that in the slide. Whoops. I didn't mention that in the slide before. Giving you a preview of all the good stuff that I'm about to talk about. I apologize. If you look at the contract and reservation phase 2014 to 2015, you'll see that there is a big narrowing of the product that's the pre-construction sales. That a lot of that product came off the market, converted to rental, went in a different direction, is not actively selling anymore. And so what that means is that contract and reservation phase, as that narrows, new product is not going to start as quick. So that's one of the other data points that drives me to believe that there's some discipline. And while it's a key bellwether, we need to talk about it. We need to talk about the positive things happening in downtown Miami. And if you haven't gone to downtown Miami because you're comfortable and you live in Palmetto Bay or you live in areas outlying Miami-Dade County, I encourage you to get downtown. I encourage you to take a day trip, get on the Metro Rail, get downtown, and walk around and see what's happening, because it is really something else. So where are we heading? Big picture, I think 2016 is going to be a little slower. I think that's okay. We're going to see fewer transactions. I think pricing holds up, but I think it'll be harder to predict. I think we're going to trend appreciation rates probably low to mid single digits. We may not see overall double-digit price increases, and again, I don't care what the media says. I think that's good, because I don't think we've seen anything close to 5 to 6% wage growth. We're still at relatively stagnant wage growth. Our employment statistics are magnificent. We're hiring a lot of people, and we're bringing a lot of really smart people in. But our average wage growth is not keeping up with our product pricing. I think if you're in a unique, you have a unique product or high barrier to entry market, you're going to outperform. That sounds, sort of no kidding, right? But at the same time, I think it's important when you're talking to sellers to say, look, your product positioning here is this. You need to start thinking about product positioning in the marketplace when you're talking to sellers about why you think they could get the higher price or why they're not going to get the higher price. You're missing these key things that the market is looking for. I think the global market, the global economy this year is going to get some legs. I think you're going to see institutional money coming out of the United States and getting reinvested in Europe. I think Europe comes out first. I think that's going to be a very, very key market. Teresa mentioned before about France. I think you look at France, I think you look at Italy, I think you look at Spain. You look at these international European markets that have good fundamental long-term prospects and a formalized economy. And I think those markets are going to get invested in with strong U.S. dollars. And when that U.S. dollar, when the institutional money leaves the U.S. to go overseas, they're going to start in Europe. I think South America still has probably 3 to 5 years, not only because of political instability, but also a function of low oil prices. And when oil prices come back, I think South America will come back quicker. But I think it's a long shot to say it's going to be less than 2 years. And I think that all the pricing this year, sub $1 million, is going to be hot. But inventory expansion is going to soften a little bit. I want to close with this. South Florida, the South Florida economy, and in particular Miami-Dade County, has some really, really good fundamentals. I've been on record before as saying, well, the Miami downtown market, the condo market, it's not a fundamental market. It's driven by external buyers, and therefore there's no reason to look at job growth. There's no reason to look at employment. There's no reason to look at the normal metrics, because 75 or 80% of the product that's purchased is bought by foreign investors and foreign purchasers and ultra high net worth individuals. But when you talk about the broader residential market and commercial market to a certain extent, you need to look at these fundamental measures. Now, I will point out that these statistics only go through 2014, and of course you can see the report is dated October 2015. So, you know, obviously there's some lag in this, but I think that the 15 numbers are better. When I see what happened, I think you'll see the 15 numbers expanded. Let's talk about the employment and labor force. We have 2% job growth. Now, it's funny, you know, there's a bias across the world where, just generally with people, where everybody thinks 100% is good, right? I did my best. I gave 100%. And if I say, well, we had 2% job growth, you say, well, that's low, right? 2%, that's horrible. That's not 100%. 2% job growth is double the normalized job growth throughout the United States. We are outpacing United States job growth by 2-time factor in Miami. That's amazing. 2% job growth is very, very strong in an economy. Over the last year, if you look at it over 2009 to 14, 9.7% job growth. So we've almost averaged 2% for 5 years running. That's phenomenal. That's a phenomenal statistic for us to be thinking about where our residential market is going. Because when jobs are growing, people are buying. You look at household income. I hope you guys can see the screen because this blew me away when I look at it. Look at the bottom 3, 4 income categories. 75,000 to 100, 100 to 150, 150 to 200, and $200,000 or more. Between 2013 and 2014, the population that made over $75,000 grew between 4 to 9.5% in a year. In a year. Between 2009 and 2014, that cohort making that kind of money, which is the kind of people that are buying $600 and $700 and $1 million homes, grew by 20 to 30%. Now, I'm not an elitist. I believe that everybody in this county that's been here and invests here and comes here, I want this to be a diversified economy. I absolutely do. But in many ways, the job growth, the unemployment rate, the opportunities that are being created here are actually lifting these incomes. They're lifting everybody's incomes. When ultra-high net worth individuals come here, what do? They buy houses. And when they buy houses and they buy condos, what do they need? They need furniture, they need services, they need all of these things. So everybody that lives here makes more money, and that lifts all boats. But at the same time, the people that are coming here, that cohort is growing, and that's a positive factor for our overall economy. I also want to point out some amazing statistics in education. The growth of associate degree programs, 4% growth in the population that has an associate degree. 7.5% growth in graduate degrees. Now, some of that is because of our business community, right? The types of businesses that we attract, logistics, medical professionals, and all of these, they require graduate degrees, right? They require advanced degrees. But the people are moving here to take those jobs because those businesses are growing. And that's a very, very, in the long haul, forget about 1-year statistics or 5-year statistics. Over the long run, this is a really, really, really positive sign. And then last, I think when you look, and I said it before, I said I'd get to it at the end, our net housing creation is less than 1%. That basically is shrinking because over time, you lose homes, right? Homes get aged, you have to knock them down. And of course, anybody that's active in Pinecrest is seeing that happen, right? Everything used to be that we started knocking things down that were built in the 40s and the 50s. Now, if you go to Pinecrest, you're going to be hard-pressed in 5 years to find a house built in the 60s, right? So this inventory recycling is happening, but our overall net growth, even though our population's growing 14,000 people a year, our housing stock is not expanding and cannot expand, other than in the condo segment, cannot expand as quickly as our population. Which means the long game, fast forward, is more people end up in multifamily housing opportunities because that's the only place we can grow. We can only go up. So we're going to see a higher proportion of condominium ownership in the long run than home ownership. And if you're a homeowner in Miami-Dade County, single-family homeowner, that becomes rarer and rarer and rarer product every year that goes by. And that does not reverse itself. So I think the future, the long game in South Florida and in Miami-Dade is very bright. 2% job gains, excellent. 5% growth in households over 75,000. And by the way, that's 5 to 20% growth. That's the low end of the statistic, 5% growth. Key industry segments, healthcare, education, finance, insurance, real estate, logistics, international trade, and aeronautics. 7.5% growth in the population of graduate-educated people. That's 7,500 households in a year with a graduate education. And I would also add, too, to the credit of those in the educational community, this is a combination of both improvements in our secondary school education, but this is in very, very large part to investments that have been made in FIU and Miami-Dade Community College and all of the various educational institutions, even the private institutions like the University of Miami and others that have been endowed, that are drawing more students here and keeping them here. So when you look at our educational infrastructure, and I can't go through all of them because I'm too shell-shocked to believe how good this number is, but I mean, Broward County as well, Nova, and you go through all of the various systems. Our educational system in South Florida is poising us to win, and I'm very happy about it. And then last, new housing creation is down, static growth, and what's existing gets more expensive. So in the long run, I think very, very good things for Miami. I hope you got some statistics and some takeaways. I guess, the last thing I'll say is this. Overall, as it relates to pricing in 2015, there were 6 single-family markets that saw price reversals, 38 submarkets gained. That's a great, great statistic and one that you can take with you. So thank you very much for your time, and thank you very much for the opportunity to be here.